Good morning from our global headquarters in New York. I'm Manus Crenny alongside Danny Berger. It's Bloomberg Brief. Let's set your agenda.
A crushing defeat. Macron calls for a snap French election after far-right parties gain in the EU elections. Elliot's buying spree. Paul Singer's firm takes an almost $2 billion stake in Southwest Airlines. That, according to the Journal. The investor took a similar chunk of SoftBank last week. And markets brace for a big week ahead. Both CPI and Fed decisions on deck for Wednesday. Good morning to you, Manus.
Good morning, Danny. Well, counting down to potentially a double blow on Wednesday with the CPI and the Fed. Now, you've got a little bit of a hint of red here. We rallied for 6 weeks in a row. We've given somewhat back this morning. A couple of stocks to keep an eye on. It is the day of the stock split for NVIDIA. I'm excited. I know that a lot of people out there are. It's a generational opportunity, according to Evercore. Stocks are lower by 0.2%, but that NVIDIA stock split, NVIDIA could go on to be 10 to 15% of the S&P 500. Hubris and politics in Europe. We'll talk about that in a moment. What might it mean? Outcome learning lessons for here in the United States of America. French stocks at the bottom of your screen, by the way, down the most in 11 months as Macron panics and calls a general election. The Paris market down 1.9%. That is the view from Pangaea. Marine Le Pen moving ahead in the polls with 32% of the polling at the moment. That could be a disruptor. The bond markets, of course, Southwest Airlines, Elliott in there, in like Flynn, taking another chunk out of Southwest Airlines, invoking change there. Again, activism is the key word. Bond markets, we were up 10 basis points across the tenors on Friday. That's on the back of the hot jobs report. The narrative now is one and done, and not even one and done in the Fed in December. We're looking at a 60% probability of a cut. BMO's survey before the jobs was 33% of the market would sell strength in the pop in yields, 446 on the 10s. The euro is down again, trying to price in this political risk. We're down on the risk of the moves to the right generally in Europe, but more so in France and Germany. Danny, good morning. Welcome back. I've done a bit of housekeeping.
I was going to say, eagle-eyed viewers might notice something a little bit different on the set. Manus, you've clearly been busy at Home Depot. Good for you, supporting that company when they need it as most. But as you've been busy, the Europeans have been off to the polls and delivering what for many are surprising results.
I want to assure you the quality of this set.
Is this what you've been doing over the weekend?
I have not been to Home Depot. I've been out. We spent the budget.
Home Depot?
There's nothing wrong with Home Depot.
There we go. Look at this beautiful shot. Look at this beautiful new desk. So
you leave me alone, and that's my talent comes to the fore. Right. What have we got?
Again, it's these European elections. I wonder if how much to a degree they're really a surprise. But we keep seeing this over and over again. You saw it in Mexico, the peso taking a hit after AMLO's successor got a bigger majority than expected. India, worst day for stocks in 4 years with a closer election than people had expected. Again, in Europe, something similar. The far right gets votes, but it's what we expected. Yet, is this market prepared? The volatility would suggest no.
Well, the FX market is certainly stuck in a range. The euro, once you look at the euro over 2 days, down 1.25%. That is the biggest move since September of last year.
Yes.
I am drawn to Terry Haynes' report. I think it's worth drilling into. There's a couple of top lines there. It's the 12 lessons from these various elections. Mexico, as you say, South Africa and India. And one very, very clear theme is this. Don't lecture the electorate. That seems to be the narrative from Terry Haynes. He also says, did Macron panic by calling for this election? Let's actually take a listen to what Macron had to say as he called that snap election.
This is a serious and weighty decision, but above all, it is an act of trust. Confidence in you, my dear compatriots, in the ability of the French people to make the just choice for themselves and for future generations.
Stephen Carroll is covering the election. Stephen, good to see you today. We want to understand the scale of the shock. The move to the right is there across a broad level of the EU relative to France and Germany. It seems to be much more about France and Germany lurching to the right rather than the pan-EU move.
Yeah, exactly. These are the two narratives that we've had out of these elections. You did have an increased representation for far-right parties, but that's played out differently in different European countries. Obviously, Emmanuel Macron calling that snap election after Marine Le Pen, as polls had predicted, came in first for her party with the National Rally. In Germany, we did have an increase in support for the AfD, the far-right party there. And actually, the parties of the coalition in Germany, and particularly Olaf Scholz's SPD, had its worst ever European election election in performance too. But then look at Italy. Giorgia Meloni there in her majority, seeing the party increase support in these European elections too. That's confirming her position of power and supporting an incumbent. Pedro Sanchez in Spain also didn't see much of a movement in his support too. No kicking from the electorate there. The question in France and Germany seems to be specific to the situation in those countries. The broader picture across Europe is that the centre held. Those three parties that supported Ursula von der Leyen the last time around still have a majority in the European Parliament. The centre, according to Ursula von der Leyen, has held, and centrist politics should dominate going forward.
That gets back to these markets, Stephen. Why is there a reaction of such volatility if the centre is holding? Perhaps it has to do with France and the surprise decision from Macron to call a snap election. From what position is he doing this from? Is this strength or is this overreaction?
Oh, it depends who you talk to, Danny. This is, when it comes to Emmanuel Macron, you have to understand is that this is a man who believes he can convince anyone of anything. And what he's doing is essentially putting it up to the electorate and saying, OK, we get that you're unhappy. Again, the numbers are pretty much in line with the polls. But if you want a change of government, now is your chance to do it. He's also putting it up to the National Rally, to that far-right party led by Marine Le Pen, saying, you know, if you think you can govern and you think you can do it in a way that the electorate will support you for doing it, then maybe the electorate will give you a chance to do that. And what he's really doing with an eye there, some analysts are saying, is looking to the next presidential election and saying that perhaps it might dent Marine Le Pen's popularity if her party does get into government. She ends up in this wonderfully French situation known as cohabitation, where you have a president from one party and a prime minister from another. Usually nothing gets done. The last time this happened was in 1997. That might dent some of the popularity of the National Rally heading into the next presidential election. But the policy stagnation is the story for markets. Macron's already been struggling to get measures through Parliament. Even though he was the largest party, he didn't have a majority. He had to use presidential override powers to get key measures passed. You know, if you end up in a situation where Marine Le Pen could be Prime Minister, for example, if the National Rally were to win the election and have a majority, that means even less gets done. And that might explain some of what you're seeing on markets. Well,
we know it's a market you know very well, Stephen, having spent a lot of time in France. We appreciate it. Bloomberg's Stephen Carroll in Brussels. Let's get to our guest. It is Freddie, Lait, CEO and CIO of Latitude Investment Management. Freddie, thanks for joining us this morning. Manus and I woke up, got into the office, and immediately pulled up the French banks. They are taking a huge hit this morning. SocGen down 7.5%, BNP 4.5%. It is a market, Freddie, that's trading this as one of financial risk and stability concerns to the French banks. Is that correct?
Good morning. I think it's probably a little bit of an overreaction, in my opinion. As you say, the actual results weren't miles away from what the polls were suggesting. But I think it just is indicative of a market in general, which is a little bit complacent and has, you know, even in Europe, I mean, obviously the US has been much stronger, but even in Europe, you've been seeing a little bit of a catch up. The banking shares, you know, have been catching up a little bit with some of the US counterparts. And I think this is just a bit of the froth being taken off the top as people say, well, this does add some uncertainty, geopolitical tensions rising. I mean, I think this is more of a social reflection than an economic one. But either way, to Stephen's point, you know, we've got a lot of policy uncertainty. They haven't been getting things through. I'm not convinced they actually have the right policies that we should be seeing to get through. But you know, if we do have cohabitation and we do have this sort of break in ability to push any legislation through for the next couple of years, that does just sort of muddy the economic policy making even further. So I think to some degree, it's weaker news in the short term, but possibly an overreaction in some of the French stocks.
Freddie, good morning. Good to see you. The very British response, and it's a bit of a panic by the French. Look, it is understandable. The euro is under pressure. It's under pressure against the crosses. And as Danny said, French banks are lower. But if I look at this from the other side, the opportunity, if I look at the concentration risk in Europe, 37% of the top 5 in Europe versus 60% of the top 5 in the S&P 500. When you see these kind of meaningful drawdown days, does that present windows of opportunity in your mind? Because Europe has already begun to cut rates. Some would say maybe that's a little bit more onerous than optimistic. Your response?
All else equal, yes, it should create a bit of opportunity. We're going to continue to have policy uncertainty for the next 5 or 10 years in my base case for Europe. So if you're looking to invest in European assets, the points at which people fear it a little bit more should be points at which you see a little bit more valuation opportunity. It's not like it's going to go away. We're not, I don't believe, going to have some sort of central story for economic growth that's going to outweigh the US in the next few years. So there are still opportunities in Europe. There are still some great companies. I do think the more European economic sensitive stocks, like, for example, the banks, we don't like the European banks. We much prefer the US banks. We just think there's durable growth embedded within those businesses, which there isn't in the European banks in general. So, there is a risk that people have just been trying to find the alternatives to US assets and have been putting a bit of misplaced faith in Europe. So
Right.
those who are renting their positions here, those who are just sort of tempted in, may be tempted to run away again. But I think for European investors,
it's the tourists, Freddie. They've been pushed.
tourists.
The equity European tourists. They've
Exactly.
been pushed out of the water. I got to say, Freddie, what a way to start the week. First of all, Manus changes the set on me, so I need to get accustomed to that. We have the European elections, the volatility that comes from it. And then we have Wednesday, Freddie, a double dose of CPI and the Fed. According to Citi, this market for the S&P is priced in for a 1.25% move either way. How do you prepare for something like that?
Yeah, it's pretty difficult. I mean, you've seen, I think the first thing I'd say is no one has a clue where interest rates are going. I mean, look how much the interest rate expectations have changed in the last 2 or 3 years. They have been dramatically wrong as a market, as a group, as a consensus. And so I wouldn't try and put too much faith in the overarching kind of, WERP on Bloomberg or anything else like that. Preparing for it, for me, is just the biggest risk at the moment, to speak frankly, is valuation risk in the US. There are stocks that are trading well in excess of what might be seen as fair value over the long term. If interest rates stay higher or CPI stays higher, it is likely that we see a bit of a return to that 2022 duration sell-off. I think the greatest preparation you can have is remaining invested in the US, but having more of a valuation focus.
And I like the way you present this, which is there is this obsession about how to protect, how to hedge, but you warn of the danger of positioning for rain, which then brings me to mind, which is, to quote WERP, I know you've just poo-pooed all over WERP.
Blasphemy.
Blasphemy, how very dare you. The very functionality. But we were looking at WERP this morning, the two of us, and we were looking at less than a 60% probability of a rate cut in December. You say stay fully invested, remain fully invested ahead of the cuts. So that's the base case narrative. You may question the breadth, but you don't seem to want to miss out. You've got a touch of FOMO, Freddie.
Oh, I wouldn't put it like that. I think there's always going to be great businesses that can carry on going through. I think if you own businesses, stocks in businesses that will only carry on going up or will only hold these valuations if interest rates go down, you're in the wrong stocks. You need to buy businesses that are fair value or cheap today and are offering growth and durable opportunity over the medium term. So if you're already in those stocks, I think you should remain invested.
Okay. Freddie, thank you very much. Short and succinct, a nice riposte there. Freddie Lait, keeping it real. Latitude Investment Management, our guest this morning. Other stories trending on your Bloomberg terminal this Monday morning. Foreign investors are said to get about 60% of the shares on offer in Saudi Aramco stock sale. The deal generated strong demand from the US and Europe. Funds from the UK, Hong Kong and Japan also backed the share sale and drew orders worth more than $65 billion.
Norway's sovereign wealth fund says it would vote against Elon Musk's $56 billion pay package. The vote at Tesla's annual general meeting is this week, and it's the second time that Musk's pay has been put before shareholders. Norway's fund also opposed the original package in 2018.
Well, the cost of owning a home here in the U.S. has increased by 26% since 2020. Expenses, including taxes, insurance, maintenance, have all soared. The past 4 years of inflation dealt the biggest blow to homeowners in Utah, where expenses surged 44%.
Guess we're not moving to Utah. Guess
We're staying in New York.
Because it's so much more affordable than Utah.
It is.
Okay, coming up, activist investor Elliott takes a big stake in Southwest Airlines. We'll have more on that next for you.
And later this hour, we catch up with Sonja Marten, DZ Bank, on the impact of that snap French election on the euro. Context matters on Bloomberg. This is Bloomberg Brief. Alongside Danny Berger, I'm Freddie. We're in New York, back together again. It's good.
It feels good.
She came home. Elliott Management takes a $2 billion stake in Southwest Airlines, according to the Wall Street Journal. Now, the activist investor plans to push for changes, aiming to reverse the airline's underperformance. Let's bring in Sid Phillip. He tracks the global aviation trends and coverage. I mean, Sid, good to see you this morning. Southwest stalled after the pandemic, and the guidance earlier this year, again, was about cutting back. It was under pressure. Elliott steps in. What do you think they're going to want to do with this company?
Morning, Manus. So yeah, Elliott stepping in is a pretty big moment for Southwest Airlines. Southwest Airlines has sort of lagged the industry, one, because they only fly 737 aircraft, and with Boeing under pressure, they aren't able to get new planes. I mean, they've slashed their new plane forecast. They've also sort of had to pull out of some airports, which is sort of rolling back on their network expansion, and we've seen them sort of reconsider their open policy of seating. So they are sort of struggling a bit from being a scrappy upstart to being one of the top 4 airlines in the US. And I think Elliott sort of coming in will sort of ask the management to focus on how they can sort of return to being more profitable, as well as sort of bringing their sort of stock price up to where their peers are.
I mean, so you could see this being a big moment for activism in the sector just because of all the issues it's had. Boeing, I mean, probably the star child or problem child, however you want to put it, when it comes to that regard. We're going to get plane deliveries for the month of May tomorrow. FT writes it up as this is a moment as to whether or not they can avoid being cut to junk. What is at stake?
Yeah, so at the moment, everyone's looking to see what Boeing's trajectory is on production. So, I mean, they've talked about how their production will be low this year. What everyone's looking to see is whether they've managed to get production going and get it higher. Because if they've actually sort of stalled at where they are, then it doesn't really bode well for the rest of the year. The company's already guided the year is going to be bad. And Boeing gets most of its cash when they deliver aircraft. And so everyone's looking to see what the cash coming in is based on the airplane deliveries. And at the moment, it doesn't look really good for the company because, I mean, one, they've also been barred from delivering planes to China because of a pending investigation into CVR batteries. So the company really needs to sort of get production going and sort of ramp up deliveries in order to generate cash, and that's really crucial for Boeing. And everyone's sort of looking to see what that means, because the rating agencies have previously warned that they may have to cut Boeing if they can't really get their cash outlook higher.
Which makes it so much more expensive for them to even borrow cash. Sid, we appreciate it. That is Bloomberg's Sid Phillips. Okay, coming up, Bond King Bill Gross, man, I love this story. He's looking to take the crown in another kind of investment. We won't spoil for you what it is, so come back with us after the break. We'll break it down here on Bloomberg Brief. It's your Bloomberg Brief on this Monday. I'm Danny Berger, Manus Cranny in New York. Let's get you your front page news. We're going to look at some of the headlines around the world. First up on Bloomberg, Benny Gantz has resigned from Israel's government. Manus, he's calling for elections. In it, he's criticized the prime minister and his handling of the war against Hamas. What used to be a coalition of rivals has now fallen apart.
Yeah, it's a question of whether it really changes the narrative for Netanyahu or just, again, raises more questions about his tenure. Next up, New York Times, Donald Trump appealing to the working class voters at a rally in Las Vegas. This was on Sunday. He said he would scrap taxes on tips for hospitality workers. That's if he wins. Trump stepped up his campaign, of course, after that felony conviction here in New York, Danny.
If you're going to talk about no taxes, that's the place to do it. It's Las Vegas, a lot of hospitality workers. Okay, Manus, we got to get to the story that caught both of our eyes. This from the FT. If you're in for some nice stamps, Bill Gross will be selling his collection for up to $20 million. Manus, this would easily be a record. It's going to be at the Robert A. Siegel auction house if anyone's interested in buying, including the Z Grill stamp worth $4 to $5 million, a new record by a long shot.
And that would set a record. I mean, if you just think, you know, Bill Gross being such an avid philatelist, there you go. He's gone from Bond vigilante to stamp king. But do you know what amazed me was I actually looked up and see who else is out there that's actually been big buyers of stamps. Freddie Mercury, John Lennon, both their albums are on display in the National. I know the thing she discovers: John Lennon, Freddie Mercury, and the U.S. president F.D. Roosevelt.
I love this. On your weekend, are you going to see Freddie Mercury's stamp collection? Like, I love this view into Manus, the pure nerdery.
I'm off to the National Postal Museum. I've got other things on a Friday down in Greenwich Village to do.
One of the other things I really liked about this is what he said in selling these. He said that the stamp market is due for a correction. Bill Gross this is. He said it used to have a fundamental base that doesn't exist anymore, the fundamental base being kids.
That's what I'm saying. He's calling the top of the stamp market. His mother actually bought stamps. The idea was to buy stamps, create value to put him through university. Apparently that didn't work out so well, but they can ask him a little bit later on. The man himself, he's on Bloomberg Markets. The close, that is at 3:30 Eastern Time. There you go. Yeah. Top of the market in bonds.
Exactly.
Top of the market in stamps.
I think I care more about his stamp view than his bond market view these days. That's pretty cool. Got to get out of the stamps. There's a correction coming.
Okay, but we're trading the range in bonds, which is 420 at 450. We're going to catch up with DZ Bank Sonja Marten. What does she call her range on the euro? Good morning from New York.
From our global headquarters in New York, I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
It's a crushing defeat. President Macron calls for a snap election in France after far-right parties gain in the EU elections. Elliot's buying spree. Paul Singer's firm takes an almost $2 billion stake in Southwest Airlines, according to the Journal. The investor took a similar chunk of SoftBank last week. And markets brace for a big week ahead of both CPI and a Fed decision on deck this Wednesday. Danny, good morning. Good to have you back.
Thanks, Manus. Good to be back on a week nonetheless when volatility is rife through in this market. Euro weaker by almost 0.5%. European parliamentary elections is the reason why we're here. The results were largely as expected. A little bit of the far right coming in, but perhaps it is Macron, which has called for a snap election that is upsetting these markets. We'll get more into that in just a moment. In the meantime, 10-year yields tick by about 1.5 basis point, 4.4% is where we land. It is a big week. As Manus mentioned, we have both CPI and a Fed. Before we get there, we have New York Fed inflation expectations today, U.S. small business optimism, and then tomorrow we got a 10-year auction. So might even get more volatility before then. The S&P 500, that is down 0.33% there. Your index is at 5,341. Manus, you and I both saw this. Lori Calvasina over at RBC says that if it is higher for longer, that is no cuts this year, the market may be not prepared for it and stocks will sink 8%.
And that's the risk, is that if you go for that breadth trade before you get the rate cuts, you're perhaps flat-footed or wrong-footed. But there's no doubt about it. The real focus this morning is on those European political narratives, Danny, isn't it? I mean, the euro-dollar is the worst two-day slump that we've seen since September of last year. The question is, has Macron panicked by calling this election in France on the back of the, I suppose, the roasting that him and Olaf Scholz got in Germany across Europe?
Yes. Is it panic or position of power? Freddie Lait, who was just with us, basically said this is a market that is complacent, and that accounts for the big reaction we've seen. Because, again, this is kind of what was in line with what was expected. But shall we hear from President Macron himself? This was his address calling specifically for that snap election.
Cette décision This is a serious and weighty decision, but above all, it is an act of trust. Confidence in you, my dear compatriots, in the ability of the French people to make the just choice for themselves and for future generations.
Let's get over to Bloomberg's Rachel Evans on the election results. Rachel, we're already seeing some of the reaction in the euro so far this morning. It is weaker. It's already been under pressure this morning. Is there a macro impact for this? We're just talking with Freddie Lait, who says this is a social thing, not an economic thing. So what is the scenario that the euro is pricing in right now?
Yeah, I think markets always hate uncertainty, and when you have an election called, there is inevitably a lot of uncertainty that follows with that. So as you pointed out, the euro has been under pressure. It's been really suffering kind of just from the rate differential with the US already this year. And I think when you factor in some of the uncertainty around one of Europe's biggest economies, that's really starting to weigh on the euro. France has already been really sort of under pressure from a fiscal perspective. Lots of questions about how France can kind of rein in its debt burden. So you throw into the mix uncertainty around the political outlook, and there's a lot of questions about who is actually going to really be able to tackle that issue for France.
From a market perspective, then, we're looking at the banks under pressure in Europe. We're looking at the euro-dollar taking its worst drubbing since September of last year. The risk of Marine Le Pen acceding to power, the question would then become how much policy could she really affect that would impact the banks, the liquidity, the broader questions that are governed really beyond Paris and at an EU or even at a Basel level.
Yeah, no, I absolutely think that's going to be a real focus for investors as some of the platforms that the parties want to run on for this election get unveiled. We all already know a little bit about what those would entail, but I think that the devil will be in the detail. But you're seeing that very much in some of the volatility metrics in the options market, particularly for euro-dollar. We saw sort of a shift in investor outlook towards the bearish side for the euro by the most since March 2023 today. And I think that just shows the kind of scope of the concern really out there. Volatility metrics have also kind of jumped today. So people are going to be on tenterhooks, really, waiting to see kind of the details of the platforms that they run on and who exactly comes out of this election in the front.
Well, even things like EVs, Manus and I have discussed this before about the overcapacity of China. And how does Europe deal with this glut of EVs that's going to come in and the possibility of them getting their act together with these results in hand to actually deliver legislation like that? So putting this all together, Rachel, does it have an impact on the ECB and its easing cycle?
I mean, that's going to be the big kind of question as everybody starts to reflect on this in coming days. At the moment, we're not seeing a huge amount of kind of repricing in the swap market, maybe just a little bit more towards kind of easing, seen kind of in the aftermath of the election. But I think that's going to be the big question, like to what degree do we see kind of any of the expectations around the rate path of Europe change? Obviously, uncertainty could lend itself towards more easing down the line, but really there is also the Fed to think about in this, and the degree to which Europe can decouple itself from that wider macro economic backdrop. So I think there will also be a lot of attention on Wednesday as we kind of head into that to see kind of the backdrop that we're really left with when we kind of weigh up where the US is on its monetary policy and the European political picture to see exactly what the ECB can do.
Well, we're almost down to barely less than one full cut in December, and if that CPI and this FOMC reinforce the narrative, it could be certainly higher for longer, and the dollar could remain triumphant. Rachel, thank you very much. Rachel Evans on the geopolitical impact of Macron calling his election overnight. Well, the euro is under pressure, as we've been saying. It's falling to its lowest level in a month against the dollar on the back of this snap election. Sonja Marten is with us. She is the head of FX monetary policy over at DZ Bank. So the question is this. I mean, the FX market is slightly panicking. But your first take on, some would say, is it a panic or a pragmatic response provoking the end game by Macron? Good morning.
Good morning. Yes, the market reaction certainly has been quite pronounced. I think you just pointed out that actually the result wasn't that surprising. The polls had pointed into this direction, but I think the extent of the losses of some of the governing parties has been a surprise to the investors. The facts really shocking investors a little bit here. Macron is taking a gamble. He's hoping clearly that people will vote differently in a national election than they might in an EU election, and that he will, recover some ground. In Germany, things are looking quite difficult as well. We have important elections coming up in the autumn, so it's all very uncertain. And the euro is reacting, I think, to this fear of more strife in Europe, more disagreements, particularly maybe with a view to also the many geopolitical challenges we are facing and the possibility as well of a Trump presidency, which might require us to move closer together in Europe. And right now, it's looking like the opposite might be happening.
Sonja, I'd mentioned this to Rachel. One of the things that Europe is facing the threat of is the overcapacity coming out of China. It's most present in electric vehicles, cheaper electric vehicles that are mostly blocked out of the U.S. with 100% tariffs. Europe so far hasn't come up with a cohesive response to that threat. Does a division in Europe and a more move to the right make it more difficult, make it more unlikely that Europe has a solid and cohesive response to the economic threat of China?
I mean, you'd think, really, in a way, that if you have more populist parties, that this would be something they could agree on. But unfortunately, that isn't necessarily the case. They have very heterogeneous policies and very, very different goals. So I think this election result and the tendencies we're seeing right now are probably going to make it more difficult to come together in Europe because national interests are being put, ranked higher, and EU-wide interests are maybe going to take the back seat here and there, and that's going to make things more difficult. And again, that's, I think, probably what the market is currently reacting to.
So just extrapolate for us. Marine Le Pen exceeds more into a powerful position in France. Trump exceeds the White House. The Fed remains on hold. Surely the biggest bet of all, get that parity call out. Surely the biggest bet of all is to buy your put options on the euro dollar. There must be the best value trade this Monday morning. Have they spiked in price, and would you put that trade on?
Yes. I mean, I think in that scenario that you just drew up, I would absolutely agree. I mean, we have been saying that in case Trump wins the election, euro dollar is going to go to parity. And of course, that trade just gets more attractive when we have a situation in Europe, which is looking more and more complicated. That will make a downside euro dollar trade more attractive. And I think if we were to get this kind of scenario where things go downhill here and, we get Trump in the White House, then I think, sub parity is more likely than just parity.
Oh. Sub parity. I think that might be our first sub parity call of the year, Manus, if I'm not mistaken.
Sub is sub.
Yeah, it's good. Okay, Sonja, I mean, those are big market moves. And if I think about not even what's happening in Europe, but what's happened so far globally with the election, you have a peso that got hit by an election in Mexico, which, again, wasn't a huge surprise, just slightly more support than expected for the incoming party or the continuation party. You have India, where stocks took a hit, the worst day in 4 years, because Modi, well, he's going to stay in power, but more power. You combine that with Europe, and then we have upcoming UK and, as you say, US elections. These are well-telegraphed things, Sonja. Are we just not prepared for them?
I think the market doesn't trust itself a lot of the times. I mean, we have experienced again and again in recent years that, we have elections, we have polls, the polls turn out.
Sonja, okay. One of those moments, I think, where Sonja
is it the sub-parity call?
It was just too much of a sub-parity call. I think it's interesting what she says is if you have that confluence of events, which is an accession, a more accession to power for Le Pen on the right there in France, and a Trump presidency, that gives you a really resplendent dollar, and not just a break of parity, but a drubbing of parity, a materially below parity call, which is what she's talking about.
Yes, well, we'll see if we can get Sonja back up. But if we can't, Manus, again, I think our thoughts are really interesting because it's the confluence of kind of the best of worlds for the dollar. To have Trump, to have the European elections, and to have the Fed being less able to cut, especially after a strong job numbers on Friday. You could have constructed this narrative basically saying that the jobs market was weakening, but you can't really do that anymore. It's not just March anymore. It's now the May figures as well.
Correct. And so we got a double punch on Wednesday. But have a look at the euro dollar. It's the worst two-day run down since September of last year. And again, this all brings into the thinking from a fiscal point of view in Europe as well, is what kind of risk do the bond markets have? We're nowhere near where we were in the debt crisis of the sort of the early 2011, 2012. But the risk is this: the euro is the weakest against the pound since Truss took to power in 2022. So do the bond markets face a challenge similar to a Truss moment in Europe and in France? Well, more so in France.
Well, it might be a 1997 moment. The word of the day
1997
is cohabitation. When you have different parties, the prime minister and the president, and they get nothing done. You like that one, don't you? Cohabitation. It's very French.
It is very French, actually. It's very contracted. 1997, trading bonds. Actually not doing too bad in trading bonds. I'd left the commodity world behind.
Nice. I won't tell you what I was doing in 97.
It's okay. I had a Bloomberg terminal. We're all okay.
I had children's toys in 97. Okay, I'll leave it there. Okay, coming up, Manus and I are going to turn to Apple. They're going to be showing their AI prowess after a string of announcements from major chip makers. We're going to have more on their annual developers conference next on Bloomberg Brief.
It is Bloomberg Brief this Monday morning with me, Manus alongside Danny Berger in New York. More stake building by Elliott, this time taking $2 billion worth of a stake in Southwest Airlines. That's according to the Wall Street Journal. And the activist investor just took a similar stake last week in SoftBank. For more, let's bring in Sid Phillip, who tracks our global aviation coverage. Sid, So here we are. Southwest essentially had stalled after the pandemic. They've never really got lift-off velocity. What is it that Elliott can imbue into them that will put them back in the skies?
Yes, Southwest Airlines has struggled since the pandemic, and they've sort of trailed their counterparts in the US. They're not quite the upstart, scrappy airline from Texas. I mean, now they're one of the big four carriers in the US, and they've sort of had issues with Boeing. I mean, they are an all 737 operation, and with Boeing's woes, Southwest Airlines deliveries have been sort of delayed, and that sort of capped their growth and as well as their replacement of older aircraft. And they've also struggled with they've held on to policies like their open seating, and as well as sort of had to retrench from some cities. So I think this will sort of force the management to really focus on what they can do to sort of bring back their margins to where their rivals are, as well as bring back their stock prices. And I think that's what that's going to be the primary focus for the management.
I also just want to take a pause and reflect on Manus's excellent use of airline puns. That was such a good density of that, Manus. I'm quite impressed.
They are still flying, one's got to say. I think I was a bit disingenuous. I mean, flying higher. There we go.
It's the metaphor. Speaking of metaphors, Boeing and its ability to get new planes off the ground and to get their company off the ground. They're going to have their May delivery data tomorrow. Sid, what's at stake with this?
Yeah, so everyone's looking to see what Boeing's delivery trajectory looks like, because, I mean, deliveries have been low. Boeing has been forced to cap production by the FAA, but their production is very, very low, and so they need to be able to ramp up production because that's essential for cash flow. And at the moment, everyone's looking to see what Boeing's doing in terms of future production and where the trajectory is going, because that'll be able to determine what their cash flow outlook looks like. And that might be able to sort of determine whether or not they hold on to their investment grade credit. Otherwise, they've been sort of threatened with downgrades by the rating agencies if they can't get their free cash flow back up to where it should be and where they've sort of previously guided to where it would be.
Okay, Sid, thank you very much. That is Bloomberg's Sid Phillips. Let's get to Apple now. It is a moment of truth for them this week. The iPhone maker, it's going to lay out its vision for AI at the annual Worldwide Developers Conference later today. Let's bring in Matt Bloxham from Bloomberg Intelligence, who covers tech and Apple. Matt, at the last Worldwide Developer Conference, generative AI was not mentioned once. Instead, it was the unveiling of the Vision Pro. What's going to be looking out for this time? Not just mentioning generative AI, but what do we need to hear from Apple to show they're not behind?
Yeah, well, I mean, we're expecting a very broad range of updates to kind of familiar applications that people use every day. So this is not, I don't think, going to be about one killer generative AI app. It's about how that technology is going to enhance things like email, their Safari web browser, note-taking, maybe even Siri. And obviously there's going to be a partnership expected with OpenAI around a kind of chatbot whilst they develop their own technology. So I think that the aim for Apple in all of this is to kind of show that they understand generative AI, they're using it to enhance the overall Apple ecosystem. And I think one of the things people have talked about for a while now is this so-called expectation of a new smartphone super cycle. So people have been holding on to their smartphones for longer, 4 or 5 years maybe. They've got the new iPhone 16 coming out probably in September. That's going to be the technology you need, the hardware you need to really unlock these AI features. And so the question is, if you've been holding onto your phone for 4 or 5 years, is this the trigger to make you upgrade? It's like, I want these AI features and I'm going to have to upgrade to get my hands on them.
Well, the other major event that we're all focused on is, of course, NVIDIA. It's the 10-for-1 stock split. A lot of people have said to Danny and I, this is going to be a hugely volatile event. I was looking at what Julian Emmanuel was saying over at Evercore. He said, this is a generational opportunity in a stock set to lead the age of parallel processing. So if I couldn't afford an NVIDIA before today, now's my moment.
Yeah, that's right. I mean, the shares are at $1,200. That potentially makes it not inaccessible, but harder to access for retail investors. So I think the whole point of the stock split is to kind of cut that to, I guess, effectively $120 share price, which makes it a lot more of a fungible investment opportunity for the retail investor. I think maybe there's going to be some short-term technical volatility around it. Obviously, it doesn't change anything about the fundamentals of this company. If you're buying into NVIDIA, you're really buying into the view that one, AI is the future for everything, and two, that NVIDIA is going to continue to be the leading technology provider in that market. So, but definitely for the retail investor, this is going to make it a more accessible investment opportunity.
Okay. Thank you very much, Matt. Let's see what they deliver in terms of that conference, and indeed looking forward to the stock split. A little bit of breaking news on the bond front. Danny, this is the repercussion of the panic, hitting the panic button by Macron, calling the election. We're looking at 10-year government bond yields in France hitting 3 1/8. That's 3.19%. That is the highest that we've seen this year.
And we're still seeing the euro take a hit too, weaker by 0.5% versus the dollar at 107. Sonja Marten from DZ Bank saying that it is perhaps an overreaction, but the threat of parity and sub-parity is still there, especially combined with U.S. elections.
Yeah, I mean, you've got to put this in context. Kit Jukes has also sent out his morning note. He reflects back to 2010. At the height of the sovereign debt crisis, you're looking at spreads moving from 20 basis points, in other words, France to Germany, Italy to Germany, etc. That blowout in the spreads, that went from 20 bips to 200 basis points at one juncture. So we're nowhere near that kind of level of crisis. But that is spiky, to say the least.
SocGen still down 7.5%. BNP down 4.5%. This is a market reaction, clear and simple.
Volatility. We love it on a Monday morning.